Good evening, friends. Welcome back to my channel, Infinite Trade. My name is Robin, and let's begin our second video or the second session of this trading masterclass. So, the video that I posted a couple of days before, I hope people are watching it. And since I've posted the video after a long time, I could see that the views are very low, but uh, I'm okay with it because I genuinely want to make videos for the people who are watching it. And I'm pretty sure that, after gaining some sort of knowledge, you may spread these words within your family and friends. So without wasting our time, let's jump into the topic. So before I begin the new topic, I just want to give you an overview. What are we going to cover in this? So basically today we are going to discuss the topic on Fibonacci. Okay. And after the discussion of Fibonacci, I'm going to take a recap of what we learned before it, like the higher time frame to lower time frame analysis, Dow theory identifying swings and the corrections and inducement, and how we are going to use the Fibonacci on the charts. So today's video and the upcoming videos will be purely based on charts, because on the first video we did not use chart and it was more of drawing and understanding. So let's begin our topic with Fibonacci. So like I said in the last video also, that we have a separate video on Fibonacci. So I'm going to again post that link so that people who want to understand the more of basics of it can definitely watch that video. And in this particular video, I'm not going to discuss the Fibonacci calculations and how it is derived and all, because that is covered in that particular video. So we will directly talk about Fibonacci levels. So we all know that uh, there are certain levels of Fibonacci. So whenever you draw, there are some levels that gets plotted. So namely, that is from 0 to 1, and there are some levels in between. So that is 0.236, 0.382, 0.5, 0.6, and 0.786, and then 1. Okay, so these are the kind of levels that we plot. So usually when you plot the Fibonacci from low to high, so what happens is this becomes your 1 and this becomes your 0. So let's look at it so that there is no confusion. So for example, I'm plotting a Fibonacci from here to here. So like I said, your lower level, so the low that you mark becomes your 1, and the high that you mark becomes your 0. And then there are levels like 0.236, 0.382, 0.5, and 0.6. Okay, I have not checked the other level, which is 0.786. So here what is important is we will be discarding some levels, and we will only keep 0.5 and 0.618. Rest all the levels will remove, especially the 0.236 and 0.382. Okay, so I'll show you the actual magic of these levels. How do you actually trade, and everything we are going to cover in this. So maybe on an intraday basis, I might cover uh, this topic separately, but at least on a higher time frame, we will try and understand how to use the Fibonacci and how to take uh, very good trades. Okay, so this is for an example. I've shown you the Fibonacci. So what we are going to do is we are going to remove these levels 0.382 and 0.236, and we are just going to keep 0.5, 0.618, 1, and 0. Okay, So for now, I'm removing the Fibonacci, because this is what I want you to do. Just keep these two levels because these are your support area, and the 0.618 level becomes your golden zone. So we are going to actually take trades whenever the market comes there. Fine. So simultaneously, we'll also do the recap of the previous topics because this will help you understand how we're analyzing the higher time frame charts and how we're also using Fibonacci to take optimal trades. So the first thing is we are on a monthly chart of Nifty, and throughout this video, I'm going to discuss mainly Nifty because I'm trading currently only Nifty, and on the expiries I trade Sensex 2, but we'll focus more on Nifty because it becomes easier for everyone to understand, and also if you have any questions, it becomes easier to discuss among ourselves. So this is the monthly chart. So what do you see in the monthly chart? See, last time we spoke about correction. So looking at the monthly chart of Nifty, we know that the market always keeps going higher. Okay. We may see some dip in between. We may see some consolidation in between. So these are consolidations. Again, there is a dip. So what are these things? These are correction. We spoke about two types of correction. One is price correction and the other one was time correction. So what happens in a time correction? Obviously the price, while moving higher, it doesn't give a dip like this, but instead it trades sideways and then continues its trend further, right? So this is something which we are going to look at in these charts. So here if you see, Nifty moved from here to here, then it gave a price correction, and then it moved higher, and now it is doing some sort of a time correction. Okay, so when do we call this as price correction? Obviously it should give a decent amount of dip, and since it has not broken the previous swing high, so we can consider that the market is consolidating. Sometimes the consolidation can be hugely volatile, but Nifty is strong. The market is definitely gaining support, and in some or the other way, uh, after this price correction, though it did not break the high, but still market managed to sustain in these levels. So looking at the monthly chart, it is very clear that very soon we are going to break this level and trade higher. Am I correct? So this is all about the monthly chart. And if you want to see how the Fibonacci is working on a monthly chart, so I take the previous swing low and I mark the swing high. So this is where it exactly took support, and this is where it did the price correction. So the price correction should usually come to 0.5 to 0.618 level. This means that the buyers who were present here will defend this level, and the people who missed this opportunity will get an opportunity to enter with a decent price correction, and hence the price moved higher. Is it clear? And Fibonacci is something which you can mark in each and every swing, okay, to understand what is happening with the price. So if the price is trading below this level, that means it is trading at the negative area. And if the price is taking a dip and giving a bounce, that means it has corrected well and it has gained some demand, and that's why the price has moved higher. And when we talk about the time correction, so what happens is you do not get a dip until the 0.5 and 0.618, but you get dip until 0.2 to 0.382. So if the price is consolidating within that range, then it is sure that the price is going through a time correction and it is not going to give a price correction. So I hope these things are clear. And secondly, when you mark Fibonacci, see a lot of times, sometimes you don't get time to actually visit the charts or do some analysis. So what I do is I just go and mark the Fibonacci levels. And what I do is, after marking the Fibonacci levels, I exactly draw a zone here and then I remove this particular Fibonacci so that I have a support zone in my chart, and that's it. So whenever the price comes to that particular place, I go for a bullish trade. Is it clear? So when you have to mark multiple Fibonacci levels, instead of keeping, 3 or 4 different Fibonacci levels, because that can create confusions. And since this is a monthly chart, this is still fine. But on an intraday time frame, if you start marking all these things, then you will have multiple levels and that will create unnecessary confusions. So in case if you're marking multiple Fibonacci, you can just draw a zone here and remove the Fibonacci, because all that we need is the 0.5 and 0.618. And apart from that, we would have our basic support and resistance, and that should be enough for our trade. Cool. So now let's remove them. So we have looked at the monthly chart. The monthly chart of Nifty looks very bullish. And now let's look at the weekly chart. See, this is my weekly chart. So if you look at this chart, what do you see? The first thing is market is bullish. Okay. And here it gave a dip and then it did a price correction until here. So the same level that we marked before. Sorry. So if you mark from here to here, you know that the market has taken support at the 0.618 level and then it again bounced back. And now if you look at uh, this particular swing, here the price has not given a dip until 0.618, because now this time it is not doing a price correction because that was already done here, and this time it is doing a time correction. That's why the price consolidated within this range. And if I have to activate the 0.236 and 0.382, and let's remove 0.5 and 0.6, then you will understand that it did not give that 50 or 60% dip, but it is taking support within this range. So this confirms that the price is undergoing a time correction. If you look at the daily chart, the picture would be more clear. See, the price did a rally. After the rally, it is consolidating within this range. So this area, we call it as time correction. I hope this thing is clear. And in case if the price happens to give a dip until 0.5 to 0.6, then it would be considered as a price correction and it would definitely pick up a good demand from that area. Let me put this back on. Okay, so the price has never touched this zone. So if it comes to this zone, then definitely it is going to pick up a very good demand. I hope these things are clear until here. So we discussed the monthly chart, we discussed weekly, and we also discussed daily. So what is the catch here is the market is bullish and it is going through a time correction, and we will look for opportunities to buy here. Okay, and slowly gradually we will also move to the smaller time frames and understand how things are working. So I hope the Fibonacci topic is clear here. all that we are going to do is just keep 0.5 and 0.618, and then we are going to wait for a dip until that place to take our uh, trades, and that could be a positional trade on a higher time frame, and even on intraday basis you can use the Fibonacci and do the trading, which we will see maybe in this video or maybe in the upcoming video. So I hope these things are clear. Now let's jump into a smaller time frame and discuss about the swings and inducement. Okay, we have checked correction. So let's move on to a 5-minute time frame. So if you remember, in the previous video, I told you we discussed the topic about inducement. So what did I tell you about inducement is my previous swing low is the inducement area. So we all know it, and like I said in the last video also, some people who learn from me, they also know it. But when does it come to the previous swing low is a question, or when will the price take an inducement? We also gave it another name, which is liquidity. So when do you get this liquidity? I showed you a drawing. So this is how the price is moving. So each time it breaks the swing high, it should make a momentum, and then it should give a higher low dip, and then it should again continue higher, break the swing low, give a momentum. If there is no momentum and it is just giving you a small swing high, which I call it as an impact high. Okay, so whenever there is an impact high that is created, so now this becomes my inducement level. So in such cases, the price comes to take the liquidity, or in other words, you can say that since there is no strong demand here and the price is not making momentum, the price can come back to the previous swing low to create liquidity, to create demand, and then it can continue higher. So this is something which I'm going to show you on the charts. Okay, so there are a lot of examples. Let's go back and start randomly from some place so that I can show you at least 3-4 examples. Okay, let's begin from October. Okay, so this is October chart. So see this. Okay, watch it closely. What did the price do here is the price is making lower high and lower low, correct? So look at the momentum here when it made a lower high, lower low. Clear? Now if I mark the swing low here, what did the price do here? Again, it took a pullback and again it came down. But what did it do here? It just created a very small low. So here there was a momentum. At least 50 to 60% of momentum should come here. Or the similar thing that you expect is whenever the price is forming a lower high, lower low, or higher high, higher low, the previous momentum, if it continues, that means the market is trending. But here we do not see a strong trend. It just created a new low, and obviously this matters. But since it did not have that liquidity, or since it did not have that enough sellers, what did the market do? It broke the previous high and it almost went closer to this high, took the liquidity, fresh sellers came in. The sellers who missed this uh, downfall, now again they came in, and now the price again fell back to the same previous swing low and it stopped here. Are you getting it? So this is how important is. So looking at this low, immediately you should come to know that the price is going to go higher. This is my inducement. It may break this level or it may again turn back from this area, or it may continue higher and take liquidity from the previous swing, and then it can fall. So let's look at more examples. See here what is happening. The price is forming a higher high and higher low. Can you see this? But look at this. When it broke this swing, it did a decent momentum from almost 25 120. It went close to 25 180. Then what happened? Or the best example is, think like this. This is the high that it made, okay, from 120 to 160, 40 points movement. So when it is making another swing high, or it is breaking the previous swing high and making another swing high, at least I should expect 25 to 30 point movement. But what happened? It just created an impact high. So in this case, what is my inducement level? I will mark it so that you come to know that when it is coming to take an inducement. So this is my inducement level, correct? So what the price did, it fell back to this place, consolidated. It is taking liquidity. It is waiting for the buyers to just accumulate their orders, and then it gave a strong momentum on the upside. So whenever you see such swings wherein the swing high isn't that great, you should automatically come to know that now it is time for me to buy on the dip. Okay, so this is the example. This is a sideways market. See again here what's happening. We'll remove this line. The price is falling with a solid momentum. So this is what the sellers need, right? But after this, what's happening? The momentum is automatically reducing. It is just creating impact low. So what happened? There was sudden reversal. It almost went until this place. So in such cases, you should automatically come to know that the price is going to take a reversal. Maybe you can plan a contra trade of this particular up move, or in case you want to stay with the trend, we would rather prefer having this swing high as a resistance, and whenever the price comes to this point, you again short sell. Clear? See again here also. Price made an up move, a dip, then it gave again an up move, a dip. So it broke the previous swing high, and now it again gave an up move, but now it is just creating smaller highs. So what happened? This is my inducement level. So the price came back to this level, and then after touching this, it gave a decent bounce. This time the bounce was better than the previous ones. Okay, then again it did not get that demand, came back to this place, and next day gap up, and it continued. So I hope these things are clear. Now you will understand that when I should be waiting for the inducement and when I should be taking the inducement trades. See here, there is another example. This is a trade that I took day before yesterday. So price came down with the momentum, then high, then a small high, a small low. So what happened? It broke the previous swing low, but there was no momentum that was here. And this shouldn't happen, right? This is morning time. Morning, we all know that market is either trending or it is very volatile, and market is suddenly falling. From almost from 25,780 to 25,780 points fall here, and suddenly the momentum is decreasing. So whenever the momentum is decreasing, see, it took inducement, again made an impact low, again it took an inducement, downfall, again it went to the inducement, and this time it gave a better momentum. And as soon as that happened, then the market went through time correction and not price correction. So if it was a price correction, it would have come until this place and then it would have again fallen. But it consolidated, it did a time correction, and then it fell down further. So again, then what happened during the end of the day, when it started creating the lower lows, the lows were not that strong. So you should know that next day there is a possibility the market may come up to take the liquidity or to wait for the new sellers to enter. The market immediately came up, and exactly at this candle is when I shorted. Okay, and then what happened? Immediately, a very good momentum. So this is how we must plan our trade, and this is how you need to be very vigilant when the price is going to reverse or take an inducement. So in just in this one video, all these topics are covered. We discussed Dow theory of formation of lower high, lower low. Okay. We also discussed the higher time frame to lower time frame analysis. We also spoke about the two types of correction, the price correction and the time correction. And we also spoke about when the price can take inducement. And we also discussed Fibonacci levels. So I hope these things are clear, and this video can definitely be an eye opener. And all that you need to do while you're trading is keep these things in mind. If you're following Dow theory, when the price is forming higher high or lower low, how impactful it is. And if it's not within a strong trend, then obviously there is a higher chance of uh, a quick pullback to the inducement level, or it can break the inducement level and go to the previous swing high and then fall. So you should be ready for this, because why we are discussing this is, see, looking at this particular fall, a lot of people would have thought of entering here. We already discussed swings. I have told you how you understand whether the swing is complete or not. At this place, if you look at the previous red candle high is broken, that means you know that it is going to take a pullback. It took a pullback. Now the green candle's low is broken, so you know that the pullback has come to an end. But if you would have entered here, the price wouldn't have even touched the previous low and took a reversal. Okay, and this reversal, then it went up and then it came down. So unnecessarily you would have given an SL here, and especially if you're an option buyer. So to avoid these things, you must keep these swings in mind, the correction phases in mind, and the chances of making mistakes will be very less. So I hope things are clear until here, and going forward, I'm also planning to keep the videos a little shorter. So I'll close the topic here, and tomorrow again I'll post another video. In that video we will discuss Fibonacci in much more detail, as to how do we use it and how I use it during my intraday time frames. Cool. So thank you for watching. Let's meet in another video. Till then, take care. Have a good time. Bye bye.